Did you hear that the Fed cut interest rates a half a point? Do you know what that really means? If you don't, you're in the right place. I'm going to simply and clearly explain this to you. If you're looking for an explanation you got in college from the economics professor that made you just want to have your eyes roll in the back of your head and it just made no sense at all, you're in the wrong place. That's not what we do here. But I am going to walk you through what this Fed rate cut really means. I'm also going to show you the impact that it's had on consumer debt and also the impact it's had on mortgage rates. But before I do that, let me introduce myself. My name is Linda Shinpaw. I am a licensed loan originator and I am powered by Edge Home Finance Corporation. And we are the #1 national mortgage broker in the U.S. All right. How is this going to impact the economy and consumer debt? Well, you should see car loans and credit card rates go down. All right. That's good news. So your payment should get cheaper on your credit cards, and you should be able to have the opportunity to refinance your cars at some point to a lower rate. There may be some more open houses to go to. Sellers see this Fed rate cut as a stimulus to the economy. All they think about is lower rates and more buyers. So I think you're going to see something going on there. Mortgage rates are not dropping a half a point. They did not drop a half a point the day that the Fed cut the rates, and they are not dropping a half a point right now. They actually had already priced in the Fed's rate cut. All right, this is the most technical and the tiniest little economics lesson I'm going to give you, but hang in there. I promise it's not going to be boring like some of those college professors we all had. The Fed funds rate is a short-term interest rate. It's an overnight interest rate. So if banks need money in order to make sure that they have everything they need to loan money to you and I, then they have to borrow from the Federal Reserve at night. Okay, there's a whole algorithm that that plays out, but that's it. The banks borrow from the Federal Reserve at the Fed fund rate. And then that rate trickles down mostly in short-term consumer debt. Okay, car loans, RV, motorcycle, and credit card rates. Those are the most common. So in a typical economy, when the Fed cuts rates, we see those consumer debt rates fall, not interest rates. But the last couple years, mortgage rates haven't been able to figure out if they're coming or going. And they've responded to all kinds of crazy indicators that used to make no impact on them. But the really cool thing, I'm going to touch on this a little bit more later, is that mortgage rates behaved as they should. They were well behaved as the Fed cut rates. And they had already anticipated that rate cut. They had already anticipated a little bump in the economy. And they had already absorbed that into the rate at least 30 to 45 days before the Fed cut rates. Okay. One more thing I should share with you, and this is kind of a negative, but the saving account rates that you've been enjoying, if you've got some money stuck over there, you're going to see those come down. Again, that's attached to this Fed fund rate. And when that rate comes down, then the saving account rates go down. So it offsets itself there. All right. Impact on home loans. We are going to see lower rates. We already have. Like I said, the mortgage industry is behaving. It is doing what it's supposed to do. And it really should only be reacting to mortgage-backed securities, maybe a CPI number, something of that nature. But the mortgage industry and rates are very happy about the direction the economy is moving. And so they are improving as well. I actually locked somebody in almost 30 days before this Fed fund rate cut on a loan. They closed the week of the rate cut and they were so nervous. They were like biting their nails. They're like, Linda, are you sure we got the best rate? Are you sure we shouldn't just cancel this loan and start over? And I looked rates up every single day of the week of the Fed cut, before, the day of, and the days after. And I could not get them a better rate. They had a great rate. So I can tell you with 100% certainty it was priced in. But as rates come down, you're going to be able to either qualify for more house, or you can stick with that price range you've been shopping in and enjoy a lower payment. And that's good news. Also, rates are at a 19-month low right now. There's several articles you can access. I put a couple here. One is Investopedia. The other is The Real Deal. There is a Wall Street Journal article. If you have a subscription to that, you can go snag that from the last couple weeks. But interest rates, mortgage interest rates, are at an all-time low. So if you need to make a move, If you need to buy, sell, downgrade, upgrade, whatever you need to do, like you can be confident in it, right? Although I'll tell you, I have some wonderful clients that I worked with this year who moved from Utah to North Carolina. And we're licensed in 47 states as Edge Home Finance, and the other 3 are in processing. So that's really cool. I get to help people in all kinds of amazing places. But these folks were coming from Utah to North Carolina, and he was graduating college. He had gotten a great job in North Carolina, and while they obviously want the very best interest rate they could get, they couldn't play the market or, time the market. They just had to move. And that's okay too. As a mortgage broker, I'm shopping. I literally have over 100 lenders that I have available to me if I wanted to work with them. That would be a little bit much. So I typically stick with about a handful of really great lenders that I shop against each other when somebody needs, when I'm pricing a loan out for someone. And we were able to get them a great rate. They were able to move across country, start their new life together. It's been amazing. But right now though, you are kind of getting the very best of what the market's had to offer for a few years. So it's a great time to make your move. Okay, as a home seller, this is good news, right? Because more than likely, you're going to see an increase in buyer activity. You're going to see a surge in demand for homes. And when demand goes up, a lot of times prices follow. Going back to college, Econ 101, right? That is the trend. So especially in an already competitive market, you're probably going to see you're probably going to see home prices continue to increase. But home sellers, great news for you. Home buyers, you're going to start seeing some better rates. So hopefully you'll get a little relief on what those payments are going to look like. Okay. I already talked about most of these things, but I just want to remind you, this is a great time to buy. 19-month low. The market had already absorbed that Fed cut in before it happened. So don't hold your breath waiting for the other shoe to drop. Like it's in there. Everybody knows what's going on, and we're expecting more cuts. And this is the most important thing for me to share with you right here is we are expecting rates to creep downward. Okay. This is not going to be a downhill race to see who can get to the lowest rate the fastest. Everybody is starting to behave in a more normal fashion. Everything is starting to react to other economic indicators in a more normal fashion. So do what you need to do and just expect that you might get a little bit better rate between now and when you go under contract, but it's not going to be anything drastic, and you don't need to put off buying a house. Okay, refinancing. I get asked this question all the time right now. The answer is yes, it makes sense to refinance. You may have a 7 or 8 interest rates in the 7s or 8s. And if you do, then you should really reach out to myself or the loan originator that you trust and have some conversations about where rates are today. But what I can also tell you is that most people have over $10,000 in credit card debt. And that credit card debt is at a 20-something or a 30-something% annual interest rate. That's a lot. And that could really be hurting your monthly cash flow, your monthly budget. So refinancing right now is looking more like, hey, Linda, I have some credit card debt and I am just so strapped for cash each month. Can I roll my credit card debt in with my home loan and will I be in a better place? Now, while the principal on that new mortgage will be higher than what you had before, when you combine those interest rates into when you take that credit card debt and put it into a lower mortgage rate debt, your payment is almost all the time going to come down. Okay. Now I know you're spreading that debt out over 30 years and you may end up paying more interest over that time frame. That's not the point here. I want to help you with where you are and where you need to get. And most people don't hold these mortgages for 30 years anyhow. So if you are just so strapped for cash and you need to have that conversation, let's have it. And I will show you how much you could save. And then we can look at over 30 years, how much it's going to cost you. We'll crunch every number you need to crunch in order to feel comfortable. But I don't want you to get hung up on principal, and I don't want you to get behind on your debt, because having late payments and going into collections and all of that, that's horrible. You don't want to do that. that makes it even harder to buy a house later. So anyhow, I don't want to get off the track too much here, but refinancing does make a lot of sense right now for a lot of reasons. So don't be afraid. Don't be embarrassed. If you need to have that conversation, in the description, there's a link there where you can get a hold of me. You can book a planning call with me. Okay. I've got 15-minute spots on my calendar all throughout the week. Just snag a quick 15 minutes with me. I know you're busy. We're all busy, but this is important. You are important. If you have questions about how to buy a home, how to respond to this Fed rate cut, let me know. You need to start with a mortgage professional. Okay. Don't go look at houses and fall in love with something that you can't afford, because it's so hard to find anything to measure up to that afterwards. All right. If you want to refinance, you need to figure out what your goals are, what you need to accomplish, and is it accomplishable? All right. So book a planning call with me, 15 minutes. Ask me all those questions that you want. I'm going to ask you a couple questions. We may need to talk a little bit more, or I may say, hey, make application, or I might give you some homework to do, but let's talk about what you need and how all of this makes sense in your world. Finally, I've been doing this for almost 25 years. And so I have compiled a smart home buyer's guide. It has everything from what kind of documents do I need to get pre-approved? What are you going to ask me? How do I shop for a house? What about a real estate agent? The walkthrough. I mean, A to Z, the home buying process. And this is my free resource to you because I want you to be informed. I want you to know what you're doing. And I promise you, just like I promised you in the beginning about this video, this is clear and simple advice. I'm not trying to confuse you. I don't want your eyes to roll back into the back of your head. All right. I want you to feel equipped, and I want you to feel comfortable with buying your home. And whatever I can do to be a part of that process, I am here to do that. So I hope you have an awesome day. I'm going to keep making videos for you all because you matter. And check out my free resources and let me know if you have any other questions in the comments below.